You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by MIAX, one of the fastest options platforms in the world. MIAX is now trading options on the SVIX Volatility Index, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction for confident trading, all for competitive exchange fees. It's time to make a change and give yourself an edge with SVIX. Learn more about SVIX at www.miaxoptions.com/SVIX. Options involve risk and are not suitable for all investors. The statements made are provided for information purposes only and are not intended to provide and should not be relied on for financial or legal advice. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it is time once again. One final time here for 2019 for Volatility Views. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting, at least we think so, the Options Insider Radio Network. Hope you guys have been enjoying your year, yet another year of great content we've delivered to you over the course of 2019. Got a lot more fun stuff in store for you in 2020. Coming up on our 14th year of operations here on the old. Crazy how time flies when you're talking their options. If you like what you hear, make sure you head on out there. We always have a great influx of new listeners every year, but we always like more. We always welcome more. So if you want to do your part out there, head on over to your platform of choice. Leave a review on wherever you like to listen to the show. That helps new people discover the shows and the network. It's been going for a long time, but we always like new people coming in and checking out what we have to offer here. And of course, however you listen, wherever you leave your reviews, make sure you also send in those questions, those comments. We do indeed love to hear from you guys. And joining me on the program today, we've got our old friend, the rockingest of lobsters, Mr. Andrew GIOVINAZZI from OptionPit.com by way of Carmen Line Capital. He's holding down the MIAX hot seat today. Mr. Rock Lobster, welcome back to the program, sir.
It's an honor to hold down the MIAX hot seat because you got an Australian, you got some New Yorkers, you got all kinds from the MIAX, and now you're replacing them with just like we said earlier, just a crustacean.
Just a plain old crustacean. But you're right, and now you are legally obligated to discuss nothing but spikes for the entire show, sir. So are you prepared? An hour of spikes.
I am semi-prepared to talk about spikes, I'll say I am semi-prepared. I am semi-prepared.
All right. With that ringing endorsement, he's semi-prepared, listeners. Let's dive right on into the Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
Hi, everybody. Welcome to the Vol Review. This is the portion of the show where, surprise, surprise, we review a little bit of volatility, what's going on in that vol world, the trades, the trends, the unusual activity, all that good stuff. And, you know, lots happened since the last time we gathered here together on the program. A lot's happened in the market. There were, of course, votes for Brexit overseas. We, of course, have seen pretty much the start of a détente. It seems like maybe the beginning of the end of the trade war. And, oh, yeah, we also impeached a president. So a lot's happened over the course of the past week, particularly that latter part there. And the markets, at least to end the week, couldn't care less about any of that. They're firmly in the green, or maybe they're weighing some more than the others. The end of the trade war seems to be kind of trumping, pun intended, everything else out there. We're ending the week yet again firmly in the green. We're up about 1/3% across the board yesterday. Today, markets getting more green on the screen. S&P actually leading the charge today. Usually it's a bit of the Goldilocks of the bunch. Today it's leading the trifecta, up a little over 0.5%. We've got NASDAQ and Dow both tied around a little bit north of 0.4%. Gold and crude taking a break. WTI threatening to break back below that 60 handle again, if you like all that crude. And a breakdown of all the great stuff that happened in the year's worth of futures options. Spoiler alert, we talked a lot of volatility in VIX on that show as well, because we were joined by our buddy there, the once and future Dr. VIX, a.k.a. Mr. Rowe. Check out Twifo. Of course, we had it live yesterday. It's hitting the network as we speak, so check that out after you listen to this fine program. If you like all things volatility, there's a lot in that one for you there as well. Looking back at the full year, that was futures, options, and volatility in 2019. Gold and crude both taking a break. And, of course, green on the broad screen means VIX cash taking a break as well. Both VIX and spikes. VIX and spikes have kind of been in lockstep lately, which is interesting. You know, we've seen them disassociate quite a bit by a point or more. A lot of that because, as Simon so colorfully put it, when Spikes gets pregnant with the dividend, that's when his teams get really distorted. That, of course, is pretty much mitigated now. So we're seeing spikes and VIX cash pretty much moving in lockstep. Both of them at right around 12.25. Actually, you know, coming up, VIX cash now ticking up to about 12.5. Let's see. Actually, well, both of them have ticked up now. Again, moving in lockstep. Both at about a 12.45 or so. So they've ticked up a little bit since the beginning of the show here. But in general, both of them moving pretty much in lockstep, which is kind of interesting. And both of them still pretty much down from where they were this time last week. Not quite as far down as where they were in the show. Started, they were down about a point, a little over a point. Now they're down about 0.8 or so from where they were last show. Still not a ton of vol coming out because there isn't a lot of vol left to come out, quite frankly, even though we are heading into a holiday and all these other known unknowns. Seem like a lot of them are in the rearview mirror. I think that would squeeze a lot of vol. But still, we are kind of where we are, not that far below where we were this time last week. Let's just look really, well, you know, gotta say, I'm not looking too bad on my prognostication. In fact, to start the show, I was exactly on again. I was at 12.25 for this week, and when the show started, we were at 12.25. So I'm just going to take my victory now. What do you think, sir? Exact bullseye yet again.
So again, you are seeming to grab a victory before the show is over. I've learned my lesson. You are creating your own articles of impeachment by doing that.
I've learned my lesson not to wait. Grab the victory when it is in your grasp, especially when it's an exact. I think an exact bullseye should trump other circumstances. Again, pun intended, listeners. When you're at an exact bullseye, you should be able to claim victory. What do you think?
I think that's an exact bullseye is not bad. It is showtime, and we're right there. So. I think that's certainly reasonable.
I will be generous and table my victory, but I'm just going to put it out there that I probably should win. I'm just going to leave that dangling out there as we see what unfolds over the course of the next hour. We're just laying the groundwork for my inevitable victory. Watch now, we spike, pun intended, hard to the upside, and next thing you know, Simon or somebody else is going to scoop me on that. Let's see here. Also, our old friend VVIX, a.k.a. the volatility of volatility, coming off, still lofty, but coming off that triple-digit level. It was north of 100 last week. This week, it's down around close to 3 handles, right around 9. Actually, it's ticked up a bit as well. It was down to 98.25 coming into showtime. I put it down close to 3 points. Now it's up to about 99, so that puts it down about 2 points from where it was last week. So still frothy, still elevated, not a lot of change out there. Mr. Rocklopter, it's been a bit since you've been on the program with me. What's been lighting up your tape? A lot of vol events popping off over the course of the past week. You wouldn't really know it by watching a lot of the usual vol indicators, but a few are kind of acting interesting right now. So what is catching your eye out there in the vol space this week, sir?
So there's a couple things. So a few things is so SVIX is much higher than it was last week, and VIX really is having a hard time getting lower. So there's that. It's lower, but you would think all-time highs and everybody's pretty happy, we can't get that 11 handle. That we can't get into the zone of the monk, basically, where we tiptoe around the 12 and just not, basically, for listeners, you can think about VIX as a strip of options from basically around 23 to 37 days out, that window there. But it's every call and every put that has a bid. And they do their algorithm and they come up with a weighted, not really a weighted average, but there's a square in the term. So VIX, the puts in VIX, because the vega is higher in puts than calls with the way the skew works, it's weighted higher. So that VIX at 12 is a reflective of the more expensive puts bring VIX up a little higher. So even though we're climbing higher and higher on the vol curve as SPX goes up, those downside puts, the vol just has not gone down in them. As a matter of fact, they've actually been lifting, staying firm, and lifting a little bit, which is keeping VIX higher. So the liquidity providers nobody is selling their puts, I think. That's the basic problem. We got this rally, and people that have bought put protection have not sold it, and they hold on to it. So if the liquidity providers can't buy it back, they just go and charge more money for it. At least that's what I did when I was in the SPX, and that's probably how all the guys in there that have been trading it for 25 or 30 years, whatever, it's the same thing. Nothing changes. So we've got that force happening. So that's lifting the curve up like substantially. Another thing as well, as you notice, those vol futures are they're sort of hanging where they are. There's quite a bit in the cycle to go for decay to happen. So there's not a huge reason for vol futures to be lower than where they are. Although the February and the back month stuff is still pretty high. My guess on that is just, election uncertainty, Super Tuesday, impeachment in the Senate. It could be a number of things. Maybe kind of waiting for that ink to dry on whatever the trade deal is supposed to be. So you've got that. So you've got those forces happening where, at a 12 VIX, it's zone 1. There's a reason I have those zones where they are. It's very hard to break into that lower VIX area until we have willing sellers of vol. And we don't have that quite yet on the downside. So you've got that force happening. And those expensive puts relative to the at the money. Now, remember, that's kind of how, once you start trading vol a little bit, you realize that, expensive means what? Well, expensive has to be relative to something else. So if you're pricing vol and you're a vol arb guy, you're a vol pair guy or something like that, you're looking at something cheap versus something relatively expensive over some period of time, right? That's theoretical option trading. So right now what you have is, if you think about it, there's a price or a distance that SPX can go, and the straddle is kind of the guess for the term, with a high degree of, high confidence that, the SPX is going to kind of move a certain amount. And, how high are those puts priced relative to how much the market thinks SPX is going to move? So right now, the SIBO skew indicator is at its max value. And usually like maxes out, like 150 is about the high for it. It's trading there right now. And usually that's like, that's a, Will Robinson, danger level, because, relative to the move that is expected for SPX, those puts are super high. But also because skew is a strip of puts and calls, upside calls are relatively inexpensive as well. So you have expensive puts and you have cheap calls, mostly because I don't think anybody thinks we're really going to get over this 3,200 level. And you have the recipe for what the skew index is right now, which is a very, very high number, 150, which has historically been kind of panicky. Or what it is it kind of flashes like something's going to happen. So, I mean, from an observation point of view, that's what I'm looking at, right? So what she was going to drop, I don't know what it's going to be. But that's how the vol mechanism or the SPX mechanism is pricing. And, basically SPX, those implied vols, set the VIX, they set the spikes, they set all that stuff. But that's sort of how the curve is moving. You got really cheap calls relative to the at the money and really more expensive puts relative. So the market is really pricing that, higher, I guess you could call it a higher probability of that 2 standard deviation or 3 standard deviation move than it normally does. And that's what I'm watching. And all that's happening and nothing's really moving. Which is the funny thing. So the vol gets strained on the edges of the market, like in these esoteric weird places that people look at. But overall, just SVIX cash is just grinding up because stocks are still kind of rallying. After the trade deal, kind of happiness. So that's what I'm looking at. And I don't know what's going to happen. There's certainly ways to trade or put positions on and take advantage of that. That's what we spend our time doing at Option Pit. But I think we'll see, kind of how the cookie crumbles. But we're now looking at a mid-January options, and that curve, that skew is not coming in yet. So I'll let you know when it does, but it ain't happening today.
Ain't happening today, indeed. Or maybe by the end of the show. We don't know. Crazier things have happened by the time we get to that crystal ball segment. Like you mentioned, that skew, that SIBO skew index kind of hovering at its upper band there, right around the 150 level. I haven't seen that in a little while. It's one of those weird obtuse indexes, listeners. They quote in like that 125 to 150 kind of range. It's hard for people to wrap their heads around. It's even more difficult as the rock lobster kind of just broke down because there are 2 moving parts to skew, and it's hard to reflect that in one number. People look at 150, they say, oh, the puts are expensive, and that certainly is the case. But cheap calls also play a role in that as well, and that often is neglected when people are out there discussing all things VIX. Let's speaking of all things skew, I should say, and of course VIX. Let's get on into the futures land. Of course, no real volume to talk about yet in the spikes futures. I'm hoping we'll have some more information to share in the new year, early, hopefully even January, about what's going on, when we're going to see those relisted. I know a lot of you have written in, a lot of you are interested. A lot of you were excited by the fact that the future is listed so that you could actually trade spikes, because a lot of you were waiting for that underlying to list. We also saw some of the options tightening up as a result, which was nice to see. Of course, the future is still halted as the CFTC and the SEC kind of work out their jurisdictional issues on that. Hopefully, that usually takes a while, but hopefully those types of things can get worked out a little bit faster. My ex, obviously, working on that behind the scenes. In fact, that's why they're not here right now. Out there cranking away. Shelly was telling me how he was working on it on the actual Thanksgiving holiday, but most of the day on the phone with the regulators. So these things don't rest for holidays and everything else. I'm sure they're cranking away there behind the scenes. So the spikes future is still halted, unfortunately. VIX future is interesting to watch. All year, Mr. Rock Lobster, our narrative here on the show was there was a nice little blip on that VIX futures curve right at Dees there. They were really pricing in, yet again, another very cheap, very quiet, very tranquil holiday season. Even though we thought that was kind of crazy, we had the trade war, we had, this lingering threat of impeachment and everything else. And so most of the year we were saying Dees was kind of the bargain on the VIX futures curve. Now that Dees is finally off the board, which is crazy in and of itself that we're already rolling through Dees and into Jan, but that's a conversation for another day. Seems like maybe the market kind of had it right on that one, Mr. Rock Lobster. Dees, so far at least, again, we haven't gotten to the day which was the great nadir last year, which was, of course, Christmas Eve. So there still is some time for crazy things to happen. But at least in the lifespan of that Dees future, Mr. Rock Lobster, it seems like they kind of had it right. We have had a pretty much quiet and tranquil December. Would you concur, sir?
We did have a tranquil December. Then they just crushed everything the last week of the cycle, which I thought was funny, because that Dees held up, and then the last week they just that Friday they just annihilated the whole cycle. Everybody gave up, so all the bad stuff didn't have it, and that was it. So.
Because why would you want to have any long ball when you're impeaching a president or something? Why would you think such crazy things? But
exactly, and then everybody's like, all done here, so we will sell the crap out of all this stuff. It was a very all the option pitties were very happy.
Funny how that long vol becomes like poison, like in the last couple of weeks. Oh my God, I can't hold this. Got to get rid of it as fast as I possibly can. That's kind of what we saw. We're seeing that now. Obviously, the Jan future is on the board out there on the VIX term structure, kind of leading the dance there. Jan coming in now. Obviously, that spread has widened out yet again with Jan bumping Dees back off the board. Bye-bye to Dees. That was a fun talking point throughout the entire. We'll see if that happens again in 2020. We'll keep our eyes glued for that. But the Jan is a little bit north of $2 north of where the cash is right now, about 2.15 or so. And we're seeing Feb pretty meaty as you'd expect, nearly 4 handles above the cash there as well. So a nice little premium to kick off that front portion of the curve. Kind of expected. We'll see probably that narrow quite a bit in the coming weeks and months. And if it doesn't, we'll be sure to discuss it here on the old program. Moving on out to spikes, obviously the options. Obviously, Dees has rolled off the board for VIX and for spikes, and so we saw a lot of OI rolling off the board here as well. We saw the OI coming in about 13,000 contracts in spikes, which is pretty much exactly what was open still on the Dees front. Remember, there was still some legacy 1x2 out there. So the big strikes out there right now, pretty much the top two are going to be your same Jan, that Jan 1x2, the Jan 26s with about 33,600, and the Jan 17s with about 16,750. The Dees just kind of rolled off the board, so a total of about exactly 50,000 contracts open right now out there in spikes land. Looking out to VIX options land now. Kind of an interesting week, kind of a strong week, particularly last week. Last week was a strong week, and we had a strong start to this week as well, and all of that has kind of helped the ADV firm up a little bit. It was getting pretty light, which is, this is that time of year, so you might expect that, but still, it got pretty light pretty early. We were talking about, numbers threatening to break 400,000 back in November and stuff, which is still not into that seasonal period yet. So we did break 400,000, almost threatening to break 300,000 at one point there from an ADV perspective. Obviously, with the strong amount of volume we've seen over the past couple of weeks, those numbers ticked back up. Now we're back up, not quite 500,000, but getting close to it, about 478,000 open there in VIX options land. Well, let's kick it off. Let's go, tell you what, we'll go back out to the start. But before we do that, let's break down the top 10, what's hot, what's big, what's still open. A lot of Ds came off the board in VIX too, quite frankly, listeners. That's a huge OI decrease out there in VIX options land. Close to 3 million contracts coming off the board. So not a heck of a lot left open going into the end of the year here. But let's parse what's left. Only cost you 78,000 contracts to break into the top 10 in VIX land. How often can we say that? End of the year is when you can say it pretty much. And that number 10 position is going to be the Jan 15 puts, 78,000 open. Number 9, the Jan 18 puts, about 79, almost 80,000 contracts. Number 8, our first call on the list, the Jan 18 calls, 84,000 open there. Number 7, the Jan 30s, the ever optimistic Jan 30s with 85,000 contracts open there. Number 6, even more optimistic, March 32 halves. First March we're seeing in the top 10. I'm guessing those have been open for a while, but now that a lot of other large strikes have come off the board, all of a sudden they're surfaced to the top 10. March 32 halves with 88,000 open there. Number 5, the Jan 14 puts, 94,000 open there. Number 4, 98,000 of the Feb 15 puts. Number 3, the Jan 20 calls with 137,000. In fact, we're going to wrap up our top 10 with all calls the rest of the way. Number 2, the Jan 25s, 183,000 contracts. And number 1 with the bull this week, 222,000 of the Jan 22 calls. So decent paper for a fairly light period here to wrap up the year. Decent size position, but still we've seen that number 1, obviously, in VIX land, 400, 500, 600,000. Fairly easily. Not that case right now. In fact, like I said, the OI is right around 4.4 million contracts. That's nearly 3 million lower than what it was this time last show. It's about 3 million on the calls and about 1.4 million on the puts. Let's roll out and see what trades caught our eye. The big day was actually Monday. So let's start there. Monday was 871,000, actually threatening a million contracts. We haven't seen that in a little while out here in VIX land. I think we hit about 700 some odd thousand last week, and that was the high for a while. But Monday, threatening that million, about 871, didn't quite get there. Saw some big prints out there on the DEES downside. In particular, 53,442 of this DEES 12-half, 13-half put spread going up. Again, nearly 54,000 times just in that one print. So there's 100K right there, listeners. Also, a lot of DEES downside, verticals, rolls, put spreads, call them what you will. Going up, we have the DEES 12-11 put spread went up nearly 40,000 times there as well for looks like 40 cents on that one. In fact, the DEES 12 puts alone on Monday traded over 130,000 contracts. So DEES downside puts clearly we're not that much downside anymore. Kind of at the money puts are clearly where the action was on Monday. Also saw looks like a bit of a Feb call override, the Feb 50s actually for 11 cents. This print went up late, so maybe that's a bit of a swing to the fences too. It's kind of hard to tell exactly where that went up on the spread. Went up for 11 cents, 26,400 times, and looks like maybe a bit of a funky, more DEES 12 puts, a bit of a funky, not quite a ratio, but close to it. So 20,000 of the DEES 11 puts versus 21,500 of the DEES 12 puts. That one going up for looks like 43 cents, but again, a little bit of ratio kind of gumming up the works there. So DEES downside puts the order of the day on Monday. On Tuesday, also a pretty active day, about 584,000. Maybe, I'll throw Rock Lobster weigh on this in a little bit, maybe the return of our old friend 50 Cent, because someone was playing for size in some 50 cent calls right about there in January. In particular, there were the Jan 22s expiring on the 22nd, going up 47,041 times. That was a big print of the day for 54 cents, but they kept printing. 32,000 more for 53 cents, 18,200 more for 52.5 cents, 16,700 more for 46 cents, 11,437 more for 50 cents. A total of 132,000 of these Jan 22 calls going up on Tuesday. So that was the lion's share of the paper out there, clearly about a quarter of the paper just in these Jan 22. So maybe our old friend 50 Cent, it is around his oeuvre, his genre. Obviously the price levels line up. And then also he likes himself a little bit of upside up there. So that could potentially be our friend or someone aping him for size out there. Either way, a lot of that going up on Tuesday. Wednesday was also a pretty active day, 643,000. The big print was size call strip, or maybe a bit of just a straight up vertical or a roll to the upside. Either way, it was 50,000 of the Jan 22 calls going up for almost 59 cents, so close to the offer, against 66,000 of the Jan 25 calls for 44 cents, also near the offer, which makes it seem like maybe a bit of an upside strip. 3 handles wide, interesting choice if that is indeed the case, but that one went up. That was kind of the big print of the day. Also saw, looks like a Jan put 1x2 was the Jan 12-half 14 put 1x2. The 14 puts going up 15,845 times for $1.09 against 31,690 of the Jan 12-half puts for 38 cents. And also maybe a Jan Feb call roll, probably Jan 16s rolling out the Feb 16s, doing that for $1.31 and $2.18 respectively, 22,000 times. Thursday, coming into the end of the week, is kind of where we've seen the light volume, which is funny because that's where we've seen the vol kind of come off a little bit. It's also where we saw the impeachment in the rearview mirror for us, and yet that's not really, you'd think a day of impeaching a president might drive a little bit of volatility paper. Yeah, not so much. Thursday, 224,000 contracts on the tape. The big prints were March 50 calls for 19 cents, so kind of off the offer about 7,800 times, and a 7,500 lot of a Jan vertical, the Jan 23 37 halves going up 7,500 times for 49 cents and 16 cents there, respectively. Today, also, not really blowing the doors off from a volume perspective. Coming into showtime, we had a little bit north of 250,000 contracts on the tape. The big print, Jan 37 halves going up for 15 cents. That's on the bid there. So maybe 33,300 times. So maybe someone deciding to perhaps leg into a little bit of vertical against all that other upside they took down earlier in the week on the 22 strike. So maybe a 22.37.5 vertical being legged into across the span of a few days there, at least for 33,000 out of the 130,000. Also saw a Feb put spread, Feb 14.15 put spread going up today for 52 cents, 20,000 time. That's a lot of paper to parse there, Mr. Rock Lobster, but any of that catch your eye this week? Did you and your crazies think that was 50 cent coming back on Tuesday as well? And any other paper catching your eye in VIX options this week, sir?
You know what? I was just talking to Tubby about the 50 cent options. I just sent him so besides Monday, it has the 50 cent MO, so we'll see. Also, what I thought was interesting is a lot of the DECE cycle earlier in the week. I took the last of my DECE off on Monday. There's a good opportunity because remember we had that VIX spike. It was like a baby spike, 2 weeks ago or something like that. So that was a probably great opportunity for December. Pretty much made my month. So at least it gave you an opportunity to just buy cheap VIX options. I mean, it was everybody thought, here we go, the trade war or whatever, no deal, blah, blah, and then it just didn't happen. So I think a lot of that paper was unwinding that quick vol spike that we had. And then after that, the week just kind of died. I mean, I don't think VIX has really moved 25 cents since then. And then I think the low of the week was an 11.99 print for settle on Wednesday morning, and since then it's been, the market just kind of grinding up in some sort of scary, boring fashion. So, I as far as new paper goes, I think that paper was indicative of what at least our pit guys are doing, just getting rid of some of the last of their December. Looking at January, I own a little January already, so we're kind of seeing how that plays out. And I think, that those upside call buyers are doing the same thing everybody else is doing. I think they still want to be long if they're still long SPX or whatever, and they're just buying tail risk for the nasty surprise that could happen, whatever that nasty surprise is. I know we invoke this every once in a while, the Sith Lord has yet to reveal themselves. And I think this is another case of, I don't know if it's just curve creep like we described earlier, that's been pushing, keeping the cash from really falling a little bit, or there's just a ton of active buyers thinking something bad's going to happen. I just don't know because I haven't divined the tea leaves enough yet to get an answer on all that stuff. So I just think all the big papers just doing similar things to what the pit crazies are doing, unwinding their DECE and rolling into the next cycle. As you know, option trading, it's a full life. Full life. And speaking of dark side revealing itself, I'm going to be heading off pretty much as soon as we finish this show. I'm heading out to see the final Star Wars of this saga, at least. So maybe the Emperor will reveal some interesting stuff here. But you're right. There are some lingering dark side forces perhaps lurking somewhere in that term structure that have yet to reveal themselves. What is revealing itself to be a big fan of downside is, of course, our old friend VXX. You guys love to fade it, and so far it's been working out for you. It's down another point from where it was this time last week, about 1.1 points to be precise. Down to around a 14.90, just shy of that 15 handle here on the show. Seeing decent paper out there in VXX land again these days as well. In fact, the ADV has been an interesting one to watch out here because it's actually pretty robust. It was about 268,000 contracts out there, and it's actually higher this week. It's up to 277,000. So VXX is doing some strong paper. Today, not so much. Today, about 186,000, but still overall, not bad. Fairly robust out there
for VXX. Let's see. Speaking of robust, let's see what robust positions are still open. Remember, VXX goes out today, so you got a little bit more time out here. So the D's still on the board till today. And Mr. Ropops, this is the part of the show I always get sad when I'm coming in on expiration for VXX and I see what's kind of still open out there, because usually it's a lot of size, still out of the money calls or puts. Kind of makes me sad. Let's see what we got today that maybe might make me happy. Let's see. Number 10 out here in VXX land, the Jan 22s, 34,000 of those bad boys, so still got some time there. Number 9, the Jan 22 puts, so both sides of that strike are pretty popular. Those are looking all right, 34,000 of those. Number 8, D's 15 half puts. These are expiring on the 27th. These are the weeklies. 34,000 of those. Number 7, the Jan 26 calls, 36,000 open there. Number 6, D's 20 puts, D's 15 half puts, expiring today. 36,000 those bad boys. Those are looking pretty good. The number 5, the Jan 15 puts, 42, almost 43,000 open there. Number 4, the Jan 14 puts, 48,000 open there. Number 3, back to D's. The rest of it is all D's, actually. D's 15 puts, 53,000. Yes, I could say those are looking decent. They at least have a chance of having some value at the end of the day. We'll see. Maybe this worm might turn a little bit. But coming into showtime, it was looking pretty good. Let's get it up to date on VXX here. Right now, it's 14.90, so it's still right about where it was pretty much, so hasn't really ticked up. So they still got about a dime of some juice in them. We'll see if that persists throughout the end of the day. Probably looking for a little more, but take what you can get out there. And then D's 16 puts, 54,000 of those. Those, I'm going to go out on a limb and say those are probably going to be all right. And then number 1 with a bullet yet again, the D's 23 calls. Yeah, I'm going out on a limb and also say those probably not going to pay off here today. Mr. Rock Lobster, what's lighting up your tape and indeed the tapes of your crazies there in the pit chat and VXX these days, sir?
Well, I mean, right now, so all I can say to you is this gives you the VXX word, right? SPX up 50 cents, right? Half a percent. Q's up 0.5%. VIX down a nickel, right? Spikes up 7 cents. VXX unched for the day. That's just telling you everything you have to know about VXX. In the short term, I don't see a lot there. There is considerable decay in the cycle potential available, down into the low 12s, actually. It's hard to believe it right now, but that's for the entire cycle. Like we're talking somewhere in mid, like Jan 17, something like that. But, this is it. You call it the zone of the month for a reason. You're in the 12 handle. You've got $2, $2.50 of decay in the futures. And VXX just doesn't do anything. It's hard for it to move up. It's hard for it to move down. It's, as a trade, I think it's one of the most annoying spots for it to be in. This is my lightest VXX position of the year by far. I am just very small in it. So it can move down, and if VIX cash stays where it is, it will move down. But as far as a trade goes, it's like stuck in the mud because there's so much premium in the future overhanging it. Those futures are so expensive that VIX has to shoot up for that to move at all, even on the upside. So for all those that are looking for, the next Volpocalypse, we really need a cash move to get VXX moving. So it's one of those things now, I'm looking at it on my screen and then it hasn't moved in like 4 hours or 6 hours. So there's not much to do with it, although, some of the listeners might take offense or disagree. But right now it's not much of a trade. I think there's a lot more interesting things to do in the VIX Jan cycle with all with the premium that's in the futures there than VXX right now. But I think that's where it is. It's not much of an exciting trade, but heck, next week it could be. Who knows? But Mark and I talked about this in our option pitch show today. They've taken so much of the vol out of SPX already because of the holidays. It feels like it's been pre-decayed. So it's just, it's like, what the holidays are like around that week from Christmas to New Year's. It's just, unless it was last year where something crazy off the hook is happening, it's a pretty dead week for that product. Just don't expect a lot to happen. I think that's I think that is where we find ourselves today.
Indeed, sir. We also find ourselves at the tail end of earnings season. Again, if you like all that earnings vol, all that good stuff, the earnings move results, theoptionsinsider.com, the place to go. Click on that Options News and Articles tab, top right corner of the homepage. That will begin your journey. You can check out all these reports, courtesy of our friends over there in ORAT's land. There were some, even though we're in the holiday season, there were still some big names popping off this week. Monday had FedEx, Tuesday had FedEx, Wednesday had Micron and General Mills, Thursday, Rite Aid. We're talking about that on the Option Block Show, moving, 40%, one of their biggest moves in decades out there. So Rite Aid, there were some big moves this week. Nike as well. Today even had CarMax and BlackBerry, the little engine that keeps on fighting out there. Raise your hand in the audience if you still have a BlackBerry or BlackBerry OS device out there. Not many of you out there, but say lovey. They're still out there, still cranking away. Let's see, interesting, or a lot of earnings moves and earnings move reports coming out here this week. You guys can check all that out for yourselves over there, theoptionsinsider.com. Meanwhile, it's time for you guys to take the reins as we answer some of your volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, everybody. Let's see how many of you guys we can squeeze on to the end of the show. I love getting you listeners. Maybe we'll try to kick off the year next year, too, with a big listener question palooza, because you guys are always nice enough to send in so many questions. We like to bump you up here on the show. Like morisboris. I like this handle. He sent this in right before the show. He wanted to know, hello, and a follow for you. Well, thank you. I don't know where you're following us, maybe on our social media or maybe on our various outlets for the audio. Either way, thank you, Mr. Morisboris. He says, if I may ask a question, we have the politest audience out there. Is there a site? Yes, you can, Morris. He says, is there a site I can look to see what options are open, calls, or puts on a certain equity? Thanks in advance. Yes, there are many in legion, Mr. Morisboris. I like saying that. I'm going to say that over and over again. But most of your brokers will give you this information. Most decent options brokers will show you what's open. But if you want a spot to go that has it all kind of in one place, encapsulated easily, the place I always go to for this is Trade Alert. In fact, I have a screen probably open for them right now here on the show. They make checking out things when people have questions and things on a show like this very easy. So Trade Alert is the place to go. They also have a more retail-friendly version. What's Trading is kind of all combined now, so you can go on over and you can probably get a more retail-friendly subscription. The Trade Alert subscription is very pro levels for a professional grade. That may be a little overkill for you, but if you want to see a lot of detail about open interest and everything like that, I can't think of a better place than Trade Alert / What's Trading. Mr. Rocklobster, do you have any other recommendations, or is that your recommendation as well?
Of course, I'm partial to the Flowmaster. I like him. He has a great product. There as far as opening, closing, I don't know. I can't think of anything that has the detail that the Flowmaster has. There are, even like looking at the SIBA Livevol products. I'm not sure I see opening and closing that I can think of there. So I think, a lot of it is we just look at the open interest and figure out what's going on as well. Generally, if it's more options or trading than is open, it's usually opening. And if it's less, it's probably closing. We try not to make it too complicated, but that's about all I can add as far as open calls or puts. So, yeah. And you should have open interest on any website. Just to see what's. Almost any broker will have open interest. The Opera puts it out, or the OCC puts it out every day. And it's always a little strange to me that you think there's this huge volume and you think a bunch of stuff should be gone, and sometimes the open interest doesn't appear. So it's not always the cleanest indicator that you would think. Just putting that out there.
No, it's fascinating. That's what makes it fun to parse. You see 50,000 trade and the OI changes by 2,000, all sorts of weird stuff. But you're right. Most of your brokers will have it, so you can get that basic data pretty much anywhere. But if you really want to spend some time parsing and analyzing and looking at open interest, Trade Alert's the place to go. So they'll make it easier. Otherwise, you have to kind of do all the legwork yourself. They'll do it all for you, which makes life a lot easier, trust me. All right, next up, a lot of people weighing in. We talked on the show last week, Mr. Rock Lobster. In fact, before we even get into my listeners' thoughts, I haven't had a chance to get your thoughts. We talked about this new SVIX product, kind of the rebirth, perhaps, of XIV. Have you seen this, Mr. Rock Lobster? If so, what are your thoughts?
This is a topic today, Mr. Sebastian, I've discussed. The product did what it did. However, you think about it, and it was something that we used to cover with XIV and telling people, or SVXY, like, if we ever have, a melt up in vol, it's going to be hard for these products to just buy the amount of futures they need to buy without getting themselves into huge trouble. And they try to get around it by being a little bit more open with how they can close. It kind of reminds me a little bit of, this short product was when long-term capital was falling apart and they had Goldman Sachs go in there and try to assess the value of their book. You can imagine that, the Goldman guys are seeing everything that is in the long-term capital book and probably leaning all over it to make their lives impossible to close.
Heresy. How dare you suggest such a thing?
No way. It's nice guys never do that. That's Wall Street. So I think the short vol product is similar. Like, everybody knows they're short these futures, and most of the time, that those products made money, or they had that incredible run in 2017, kind of like Bitcoin, and then their assets under management, they became a victim of their own success. So if vol jumps, like, everybody knows these guys have mandates to buy these things back, and it's easier, and I think they got front run and squeezed and pushed, and somebody tried to tip those products over. I don't know who did it or how they did it, and again, it's just, it's my little tinfoil hat thing happening. But it wouldn't surprise me if I heard it. Like Chris Rock says sometimes, I don't agree with what OJ did, but I understand it. And this is something kind of similar to that, where, like, I don't agree that maybe you should squeeze the crap out of these products and blow them apart and hurt all the retail investors. But I understand how they did it. And I think when you launch a new product like this, it's probably going to happen again. I don't see how you can get around it unless you have so little leverage in the product that you can survive a major, a major melt up. So, worse things have been listed, I guess. What's worse? Investing in TVIX and losing 99% of your money from inception, or shorting this thing, making your money, and then losing it all. I don't know. But I think there's a limit to these vol ETNs and ETFs, the way they work. And you like anything, buyer beware. But it would not surprise me if this becomes a hot mess once again at some point in the future.
We are damning things with faint praise here on the show. Now, even an OJ reference for good measure over there on the show. Yeah, our audience, I think, has a similar reaction. Our audience, I've always said, fairly savvy. A lot of them had thoughts on this SVIX thing. Ellen, first off, saying, I think the new SVIX product will be vaporware. I have no idea why it's getting so much ink. Yeah, I could agree with that to a certain extent. I kind of think I expressed similar concerns on the show last week, but a lot of you guys are clearly into this space, which is why we're talking about it again. JVIZ says, no way this new XIV thing gets approved. These guys just want attention. Maybe. They certainly got some. Not just us talking about it, but obviously Bloomberg kicking the whole thing off with that article. So they have done some outreach, which if you're going to start a new product like this, you probably want to do. Get the word out there a little bit. Ian Madden wants to know, do you really think this new inverse volatility product has a chance of becoming a reality? I think we expressed, and Mr. Rocklobster just expressed as well, our due skepticism, perhaps cynicism, this space is obviously attractive to a lot of people. They want to play in it, but there are inherent challenges in putting together a product like this. And we saw even a very well-capitalized firm like Barclays having problems keeping that thing afloat, and the regulators certainly are not exactly enthusiastic, I think, about going back into those waters anytime soon. So there are certainly many headwinds, regulatory, all sorts of others, capital-wise. This is a startup, after all, so that's going to pose challenges for them as well. So I think it has a chance of becoming, I think it's better now than it was, obviously, in the immediate aftermath of the VIX-ocalypse, but still, I don't know if a year and a half, a little more, is enough distance for the regulators to really start thinking about this space again. There still are a fair number of people. I just had Brian Overby on the network earlier this week, who like people like him in the industry, who think these products should never be created again. Think they were a disaster. So they have to overcome a lot of that as well before they can really get this. And I'm sure the regulators, some of them think that as well. So there's a lot of hurdles still to overcome for them. So I think it has a chance. I think anything has a chance, but is it a good chance? That's definitely not, I don't think, in the first half of this coming year that we'll see this. But I'd be surprised if I saw the regulators really warming up to this idea. Again, I haven't had a chance to dig into the nuances. I'm not sure they've even released the nuances of a prospectus of what this product's going to be. So I need to look at that first before I really weigh in. But just from all the things I've seen, reading the tea leaves out there, I think it's going to have a lot of headwinds. Vintner saying, how can a startup have a chance where Barclays failed? How can they possibly have the capital to bankroll another market meltdown when Barclays couldn't weather the storm? Well, I kind of just pointed that out. They do point out in there, and at least in that article, again, I haven't had a chance to verify this myself, but they do point out in the article that they think they would only sustain about a 30% loss in that type of environment, which is interesting. I'd be curious to check that out for myself. But they think they'll have less of those factors that took out the Barclays product. But yeah, that's a fair question. That how can a startup manage to succeed where a large firm that has the bankroll to stay behind it, even they had to get the heck out of Dodge? That is a fair question, I think, to ask. Jaden says, can't wait for the new XIV to hit my trading screens. I've missed fading all that juicy volatility. Well, you're not alone, Jaden. Clearly there's demand for this product category, otherwise they wouldn't be coming back at it. Yeah, you're not alone out there. And last up, we got Christian Garcia saying, put me down for a 10 lot when SVIX starts trading long-term calls, obviously. Well, obviously, Mr. Christian. I don't know, Mr. Rock Lobster, what do you have to say about all this in general? Do you, like Ian wants to know, do you think this thing has a chance of even passing regulatory approval, let alone the notion, like some people are expressing here, of the fact that this is coming from a startup, not from a established financial firm with a large bankroll and a large track record behind it? Do either of those things, either the regulatory or perhaps the new nature of the firm, either of these things give you pause on top of the fact that this is already a challenging and difficult type of product to create, sir?
I just, if you're let's put it this way, if you're the SEC and you just had a product that went to zero, are you really gonna list another one? I mean, if you think about it, I would find it surprising, by the way, if they did again. That means clearly they're not, I don't know. It just seems like they're not thinking. And I'm all for, as far as I'm concerned, list any product, and then the buyer beware. Figure it out. Learn what you're trading, learn what you're investing in. But the SEC is there to, protect people from themselves. So I would be surprised if, a smaller company could actually manage this product on a day-to-day basis. Doesn't mean they can't, but it would surprise me if they actually did.
Yeah, put me in the surprise category as well. I'm willing to be surprised. I'm not quite, I wouldn't say I am cynical, obviously, and dubious, but I'm not quite on the level of people in the industry who think this space should never be investigated again. I think there is clearly a demand for products like this. I think there needs to be a lot better job done by the industry, whether that's the brokers or the exchanges, maybe all of the above, the regulators, to make sure that what happened with XIV doesn't repeat itself, not just from a product meltdown perspective, but from people getting into that product who really had no idea what they were owning and trading in their portfolios at the end of the day. We saw your feedback in the wake of the VIX-ocalypse, and a lot of you who wrote to us, you probably never really should have been in that product. You clearly didn't understand all the nuances therein, and that's a very challenging thing. And so we need, I think, as an industry, to step up and figure out a way to present these products in an appropriate level. In fact, I even put it to Hester Peirce at the SEC not too long ago when she was on the network. I said, do we need to have maybe approval levels for some of these exotic ETPs the way we do for options? We have 1, 2, and 3. You can't just come in and blast out naked puts on the options. You have to do a little bit of verification first to prove you have a little bit of knowledge of what the risks are. And maybe we need to do something like that with these ETP. Will that stop people from trading them who shouldn't? No. But at the very least, it puts a few more gates between them and massive losses, and hopefully it'll crack down the number of people trading this who probably shouldn't be. And hopefully that could, if this product does, or something else like it does eventually come to pass, hopefully that'll mitigate the issues with it. Again, there's a lot of issues still lingering out there. And I understand the folks who say this should never happen again. This was a black eye and they don't want to see it happen. I understand that viewpoint as well. But it's an interesting side of the space, definitely. Certainly not the last time, I don't think, we're going to be talking about it here on this program. As we keep on rolling into our final segment, it is time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
And by the way, Mr. Rock Lobster, as you get into the crystal ball, of course, the portion of the show where we predict where vol will be in the coming weeks, months, and or years sometimes. Mr. Rock Lobster, I have to point out to you, the last time you were on the show was a couple of weeks ago. And remember, I picked at the time a VIX and spikes of about 1275, and you ruthlessly cart me to the downside at 1274. And what did I say to you? I said, I hope you are wrong. You were carping me in the wrong direction, because that would be very funny. And what exactly happened? VIX cash and spikes are at about 13, 15 or so. So you did. Nana, nana, boo, boo to you. You cart me in the wrong direction, sir. So there, how's that feel?
Well, well, you know what always happened to guys that carped on the floor? They never lasted long. But that does not displace the glee I have every time I get to penny you on your prognostication.
You were joyous in it that week. I will give you that. Simon got me to the upside, though, by about 0.25, and that was pretty close to where it was. I think Simon ended up edging me out ever so slightly. I was within about 0.35 or so not a bad run. And speaking of being within, I am, once again, pretty close. Not quite the exact bullseye I was at the start of the show, where both spikes and VIX were literally at a 12 quarter, which is my prediction for this week. But they're at about a 12.43. They've ticked back from 12 half. So that still puts me firmly in the driver's seat. The next closest was the meatball, and he was at a 13 and a quarter. So he wasn't very close at all. So that puts me in the old driver's seat. But here's my conundrum, Mr. Rock Lobster, and I will allow you to weigh in on this as well. This is our final show of the year, so do you want to go out on a limb and try to predict end of vol for next year now, or should we maybe wait until we can get some more folks in the MIAX hot seat and some other guests and everyone to be on the show with us as well, so everyone can get their predictions in? Or should we start now and maybe have them come in early January and give their predictions? I'm a charitable guy. I'll go how you want to roll. How do you want to roll, sir?
I think we should predict for next week. Because you're not going to be here on Friday, right?
We won't be here on Friday, so I'll have to predict for 2 weeks.
Okay, so I say we predict for 2 weeks, and that'll be the print for the new year, correct? 27, yeah, the 3rd.
That will be, yes.
Let's do that, and it's just mano a mano, and I'll even go first. I'll let you scum me for once.
You'll go, but I won. I get to choose who goes first or not. So,
okay. All
so
right.
I appreciate the offer. I appreciate the offer, but you know what? I like to blaze new trails out here and do the work ahead of time. Tell you what, I'm going to go first. Then if you cart me, I could laugh at you, but because it'll be in the wrong direction again. But here we are. We're at about 1241. Actually, just ticked even closer now to my prediction. I was at about 12 and a quarter. This is going to be a prediction now, listeners, for 2 weeks from now. So not the 27th, where we'll be off next week, but actually for the 3rd. The 3rd, so the beginning of 2020, the beginning of a new decade. Don't worry, we'll get everyone back together and we'll make some predictions for the end of the year, I think, on that show as well, which will be fun. But in general, so 2 weeks out. So this is a challenging thing now. We'll be past all of the holidays at that point. We'll be just in the afterglow there of New Year's Eve and New Year's Day. And of course, we'll be starting to look ahead to primary season, but that won't be weighing on us, I don't think, in on January 3rd, at least not yet. So that's let's see, 12 and a quarter is where I am right now. We've shown a hard time breaking much below that into, as you mentioned, for all the reasons talked about top of the show. SPX puts still bid. That skew still pretty rich. So that a lot of that has to change before we can really markedly move firmly into the zone of the monk. But you know what? I'm going to say I think we can get a little bit lower than where we are right now. How much lower is it? 2 weeks. That's always challenging. 1 week we can do. 2 weeks. I'm going to say this time next week, I'm going on a limb, say a decent amount lower. I'm going to say 11:50. Actually, this time for 2 weeks from now, 11:55 on January 3rd. All right, Mr. Meatball, Mr. Rock Lobster, I bought you some time, sir. What is your carping way going to be?
I'm not even gonna grace you with a carp. I'm just gonna go 12.75. I'm gonna ignore your bid. I'm gonna ignore your prognostication totally. Just go the other way. 12.75.
All right, that music, listeners, means we've come to the end. Do you want to spell out why you want to go upside, Mr. Rock Up? Is it just because of the puts? Do you think we're going to be a little firmer than we are?
I think the currency is going to hold. We're just not going to get a drop until we see a little bit more. A little more comes clear. That's the reason.
I was thinking about that. That was kind of lingering in the back of my mind. But that, as we saw, that desire to crush is also there as well. And there are, it's like I said, 2 weeks. 2 weeks is a challenging time frame. So I would not be surprised if you are right. I'd be much happier if I was right. But we shall see. Time will tell. What do you think, listeners? Also, if you want to get your predictions in now for vol, VIX, and spikes at the end of next year, have at it. We'll start tallying those. And then, we've had listeners win prizes. Some of them takes a while because Mr. Meatball was given the prizes last year. It takes a while for them to get the prizes, but maybe we'll give the prizes this time to make things a little bit faster. So if you want to get your predictions in now, we'll maybe give you a time frame of a couple of weeks to get all those in. Then we'll tally in all the listener questions or listener suggestions. That'll be kind of fun. But right now, 11 double for me and 12.75 for the Rock Lobster. All right. That's going to do it for this year and indeed for this decade. Crazy. Of Volatility Views. And this show's been running for a good chunk of that, so almost a decade of Volatility Views. But before we go, let's go back around the horn. Let's start with the rockingest of lobsters. He's not carping me. He's actually talking a lot of vol over there in Option Pit Land. Mr. Rock Lobster, folks want to check out what you got, newsletter, all that other good stuff. Where should they go? What should they do?
Yeah, go to optionbit.com, look at our members area, or memberships for my vol newsletter. You want to learn how to trade vol, you'll have next year will be a complete course in how to trade volatility. The whole year is part of the subscription. So if you don't learn how to trade vol after that, you might as well hang it up and go do something else.
It's on you at that point. But make the early round on Mr. Rock Lobster. Get some deals. Head on over to optionpit.com, sign up for the vol newsletter, sign up for their pit chat, all their good stuff. They have a lot of YouTube stuff as well. All that's free, so you can check all that out as well. And, of course, if you like even more, they can text you throughout the day with alerts and other fun stuff. So good stuff across the board. Optionpit.com is the place to go. And, of course, check out our friends over there from MIAX as well. MIAXoptions.com/spikes is the place to go. Or just type MIAX and spikes into your browser. Get all the quotes, get all the latest updates. Those of you who are asking when the futures will be back, that's where the press release and everything else will be as well. So as soon as it's known, it will be available up there as well. And, of course, the links to a fun show called Volatility Views. You can find it up there as well. So on behalf of the Rock Lobster, let's throw the Meatball in there as well because he was on quite a bit this year, and our friends over there in MIAX land, and even Simon from T3 and myself, I want to thank all of you for downloading, streaming, and subscribing, and we'll see you back next year for more Volatility Views.
Volatility Views is brought to you by MIAX, one of the fastest options platforms in the world. MIAX is now trading options on the SPIX Volatility Index, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction for confident trading, all for competitive exchange fees. It's time to make a change and give yourself an edge with SPIX. Learn more about spikes at www.myxoptions.com/spikes. Options involve risk and are not suitable for all investors. The statements made are provided for information purposes only and are not intended to provide and should not be relied on for financial or legal advice. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.